Conversations with Agreus. We're joined by Agreus founders themselves, Tayyab, Mohamed and Westall. Welcome. For those of you who haven't heard of us, we're a full resourcing and recruitment company that works exclusively for family offices. This is our first podcast and we may be a bit rough around the edges, but please bear with us. We've been meaning to do this for quite some time. You'll be able to see all of our white papers online, but for now this is our first in-person chat. And well, I guess that brings me nicely on to my first question, which is the pandemic, the reason we haven't done this sooner. How has it changed the family office landscape?
Oh, nice and easy question to begin with, Jackie. I mean, in a nutshell, the changes have been seismic proportions, and if I can categorize them into three buckets, I'd say the change within family offices themselves, the change within the attitudes of the candidates and the candidate space in general, and lastly, I'd say the professionalization of family offices. If I just talk a little bit more about each of these buckets to explain what I mean. Family offices post-pandemic have a much more increased appetite for riskier asset classes. It's almost like their risk profile is slightly changed since the pandemic, because they've probably seen the kind of double-digit returns that was there to be made, the availability of the dry powder in general, and just the initiatives that they took, and that's done really well for them. So what's happening is family offices are aggressively investing in that space. So what I would say is it's not just necessarily within the private markets, but I'd say that the risk profile has changed slightly since the pandemic. Because I think if there's an opportunity that's slightly more riskier, they are still considered a lot more now. The second aspect is obviously within the candidate community, and which obviously, post-pandemic, it's become the norm to have a flexible work-life balance. It's almost taken for granted that you can work remotely or work a few days from home. I mean, a few years ago, even prior to 2020, this would be classed as a luxury. But today, of all the years of doing this, for the first time I know of candidates who would turn away a job because there's no flexibility in the role. But at the same time, family offices are a little bit hesitant to this, or resistant to the actual change. And that's where we feel that there's a little bit more of an education needed and a little bit more of adaptation needed for family offices, especially when they're trying to compete with these sell-side firms for the candidate, because that's where a majority of that candidate pool comes from. And lastly, I think the biggest change post-pandemic would be just in the general professionalization of family offices. I think family offices, in the past we'd say that the beneficial owners of family offices would have made their money from very professionalized, public listed companies, but when it comes to their own family offices, it was very haphazard and run not necessarily in the most professionalized way, almost in a way like a man and his dog running this family office. But today I think it's a different case. Family offices are having really good governance structures, really good protocols in place, hiring the right sort of teams, compensating them well, and I think it's very important because it's essential to thrive in today's climate.
I agree. I'd add to that, because obviously we've seen a lot of, probably pre-pandemic, there wasn't as many board and investment committee roles. We'd probably agree on that.
Yeah.
And of late, there's been huge, and obviously it's around governance, making sure they're structured. We've been placing a lot of board seats, whether it's just to advise on investments or to educate the next generation. So I definitely feel that professionalisation is happening. And even maybe if we're talking about like compliance, obviously there's a lot of talk about regulation coming in.
Yeah.
But we, hiring a lot more legal and compliance roles, to make sure that they are meeting all the professional standards, whether it's in the UK, in the US, or wherever these guys are based, I'd say.
The only other thing I'd add is, I think family offices are also becoming cognizant of the fact that they need to really pay attention to retention more than ever. Because it's hard enough, right, even in the best of times, to hire people, especially when you're working for a family office, with all the challenges that they have and the cultural fit that they're trying to establish and everything else. But can you imagine the cost that goes with all this, and then they lose these people because they've not paid them well or for whatever reason? I think that's made them cognizant that look, this is something they can't afford. So they're really trying to retain their staff more than ever.
And also probably just to add as well that when we started this business 12 years ago, you know, it was, you know, without generalising, it was probably a place where, you know, an ex-banker or lawyer would go for the final part of their career. You know, that's pretty fair. A relationship would have been built with the banker and they'll come over. But now it's actually a genuine place for high quality, you know, job seekers. So analysts, you know, from Goldman Sachs, and now seeing family offices as a genuine place to work, you know. That probably wasn't the case.
That's brought back so many memories, because I remember I would go to these events and some of these guys, when you know, would speak to them, oh, what is it that you guys do? And this is, I'm going back more than a decade, and you know, it was still an emerging space, and we tell them, you know, we specialize within the single family office space, and a lot of people would laugh and they'd say, isn't that like for like a retirement sort of a job, like a dead end job? You know, there was that perception there, you know. But today I'd say, nah, that's definitely changed.
It's
you know?
Yeah.
Very fashionable.
Yeah,
definitely. Yeah, and they are structured in a way now that you can come and, you know, the career path might not be as obvious. There might not be ladders to climb, but you start building responsibility. You start getting access to greater deals. So you know, lots of candidates want that. But like Ty mentioned, you know, the resistance for working from home. You know, why a family office is set up, if you ask us, probably the biggest, you know, is to have control, and not in a, you know, in an evil way, but in a controlling, you know, making sure that they're controlling their assets and their life. And I think what the problem principals often find is that they can't, you know, they often feel they can't get control if not everyone's together in the office. They're a little bit nervous that if you're working from home, are they really doing it? But we're trying to educate our clients, it is working, you know. You know, it'd be the same for us. We were pretty like, we can't work from home as a business. Now we can do this a couple of days a week. It really works. You know, you've got kids. It's nice to be around your kids. You know, until they're asking you to help you with homework in the middle of the afternoon. But apart from that, it's you know, I think families are starting to learn that's needed. Yeah.
And as you said, it all comes down to people work, keeping your people, making sure your wealth is managed in the right way. Speaking of risk, and something you touched on earlier, Tayyab, about the increased appetite for investment and increasing their appetite for risk at the same time. How has this impacted the landscape and generally how family offices are managing their money?
Yes, I mean, it's a good question, and it's something we as you know, we do a lot of surveys, and we're just in the process of creating a huge global compensation survey, which will analyse investments, you know, all the elements that affect the family office. But obviously, we've seen firsthand the changes for how investments happen, and when we say that, I mean, we're seeing the types of people that are looking to hire, and Ty may mention about it, risk appetite's changed. So families are now really proactively trying to invest in private equity, and that could be from a direct investment and also increasing their exposure to private equity funds. If they're both these cause problems, because often, you know, the in-house expertise isn't already there. Obviously the fund selection is transferable, whether it's equities or private equity. However, you know, on the direct investment, that's where a lot of families globally haven't got the resources. So we've had a lot of mandates from, you know, New York to Dubai to London, where we're looking to find private equity analysts, which it can be quite challenging because, you know, you have to, often they're looking to recruit from the private equity firms, and you know, the private equity firms are equally busy and you know, and hiring, and it becomes quite competitive. I think one of the biggest issues we've found is the way family offices compensate as opposed to private equity firms, and the biggest element that we spoke on events, and it's a problem that all families are facing, and it is, do we offer carry? You know, family offices often have a slightly different investment horizon, time horizon to private equity firms. Private equity firms are looking to maybe sell an asset, sell a proper company, you know, earlier to get that investment back into the fund and distribute to obviously all the investors. Whereas families often hold for a little bit longer. So how do you compensate? Yeah. So it is a challenging, and I think there is no right answer. We're trying to educate our clients. We're learning as it goes along, but that, you know, in itself, like Tayyab said, you know, investing in more riskier investments is the trend. I don't know if you'd agree with that.
100%. And but it's still in the education process for all of us, isn't it? Like, you know, because you do more. I think more than ever, family offices just realize that, look, if you are trying to attract from the pool that your competitors are attracting from, you've got to at least compensate them on a similar level or better in some cases. But you're a completely different beast to what your competitors are. So family offices are being as creative as possible. But again, I'd say, from all our years of experience and the surveys that we've done and the primary data that we have, it's definitely changing a lot more now than it used to. I mean, it's always been around the discretionary model generally. There would be some sort of a broad-based formula, but there'd be a lot of talk of carry within family offices, but in practice it was not as much as you've seen more recently now, especially on the other side of the pond in the US. I think family offices are taking a little bit more aggressive position to these things because they understand, look, if I'm going to attract some of the best managers, I need to offer carry, especially if we are acting like the GP in this instance. So that's a major challenge, Yeah.
And I think, as you said, it's coming back to being more professional, more fashionable, not being retirement kind of end of
Dead-end
career or
job.
pre-end career jobs, and really becoming fashionable places to work for the next generation. And I think the Financial Times reported something along the lines of $5 trillion is set to be transferred over the next 3 decades. That's a lot of wealth.
Yeah.
How is the future looking? Is it as bright as you're painting a picture today? You're saying it's fashionable, it's standardised, you're recruiting the very best of the best talent for these family offices. Is the future as bright as it seems?
I mean, it does seem promising, right? Because those figures are. I think I've seen those figures from a few different researchers. I think that the UBS report had something very similar to that as well. It is interesting, but is the answer? I mean, am I going to sit here and say, look, family offices are prepared for this? That'll be lying. Do you know what I mean? Because I don't think that's the case for everyone. But at the same time, there are family offices who are very well prepared for succession and the next gen, and they're trying to integrate things in the right way. But a vast majority of them are not even thinking about this because it's human nature, right? Let's just think about this for a second. Like, if I'm the wealth creator and I'm an active person still involved in my business, the last thing I really want to think about is who's going to take the reins from me when I'm still active. It's just human nature. You don't want to think about that. Though you might have an idea of what things might be and things like that. And what we're saying is you've got to start thinking about it. You've got to really start planning about who's going to take over the reins. But there are two aspects to this, not just from a family perspective, but also from the family office, the professionals who are doing that, because there's a succession planning element there too. Because I know of CIOs and CEOs, like Paul does, that have been working for some of these principles for decades. And they've been there for 3 decades, 4 decades, doing a phenomenal job for these guys. I mean, they're not going to last forever, or you hope they do, but they have to have plan B in place. They have to think about, okay, what happens when this person steps away? What happens when I step away? Is my son taking over? Okay, if that's identified, then I need to ensure that this is all integrated. I need to ensure that the next gen has the buy-in with the management and vice versa, and because an interesting question that I was asked at a recent event, I think, was, why is it that advisors appointed by the first gen or the second gen get fired when the next gen comes on board? And it's such an interesting fact, right? Because there's the man who's done such a good job for your parents or whatever, created so much wealth for you, but suddenly you've come on board and now you're trying to make your mark, and one of the first things you do is you get rid of this person. I think it's because there's a missing piece in the equation, and that missing piece is the integration aspect. So families did not take the effort to integrate that, ensure that the next gen is involved in that sense and have the buy-in, and ensuring that integration takes place. So what they do naturally, they bring their own people. They think that, I've got a better relationship with this person and he's going to run it for me. And I think there's no need for that if it's managed correctly. And also planning ahead will avoid like a firefighting situation more than ever, because you want to be in a planned, calm position when these things happen. You don't want to be in a situation where there's been a sudden death or a sudden forced restructuring event or something like that, which is requiring you to make these drastic changes. So I think there is an element of that lacking, and families need to pay attention to that.
And you mentioned integration. What are you're not within the family office, but you support family offices. How would you offer advice to the next generation coming up, or even, as you said, an existing principal? How do you integrate the next generation? How do you integrate your new hires into the family office?
Yeah.
What best practices
It's a
you
good question, and it's different for different families, I'd say, because it all comes down to, with the next gen, how much involvement, how much interest are they going to have in the family office. And we've experienced it lately where the daughter is a successful doctor. Do they really, are they really want to get involved in the investment management, all the elements of their wealth? They may do, they may not, but obviously you've got to start having that conversation. And if they're not, And I think you've created some great reports on this. You need to think about, well, then if that's the case, we need to bring in some external leadership because the siblings may not want to, or the spouses may not want to be involved in the family office. They're happy to as an entity that just looks after their interests. They'll sit on a board position, they'll oversee, they're obviously decision makers, but they won't be there on the day to day. And there's some families that have children that actually are really proactively quite interested in this. We've had clients whose children have gone and studied investments, and they've gone and learned the trade within the banks and investment managers. And then when the time comes, they feel comfortable that they may not be the head of the family office, but they'll take a position where they're advising, and they'll eventually look to take. So it really does differ. I think one of the most important things is, I think Ty mentioned, is the next gen of the staff, the employees, because that is something that a lot of families don't think about. The people that have been there for 30 years. And we've been involved in mandates, and it's successful family offices are hiring deputy CEOs. So the 5-year process is quite transparent that this person will be moving on, as opposed to a sudden situation where they've decided to retire, they become unwell, life happens, and they need to find someone. And then what a family office essentially is made up of a group of people. That's the key to it. Obviously you have structures set up, but the people drive all these decisions. So I think having that, so we just encourage, have discussions, in the review process on a yearly basis. Start thinking about long term. No one knows where they're going to be in 5 years, but you need to start thinking ahead. And then we've seen horrible situations where a sudden tragic death in the family, and the son or daughter comes in, and then they've just closed the family office down and decide to hire their own team of maybe not particularly professional people, and it can be really disrupt the wealth preservation of the family.
And again, just to add a little bit more to what Paul said, I think it's so important, that whole integration aspect, especially when there's a change over of, a transfer of wealth, or even in terms of trying to replace your key people within the team because they're near retirement or due for retirement soon. Just planning that in place, because there's a reason why some of the most successful family offices have retained their staff for a longer term, and when the change happens, they tend to, even that happens to have a very smooth transition, because they take care of that integration piece. They take that thing very seriously. So it's a difficult conversation to have with principals, but it's an important one. I think they need to plan ahead for these things.
And that's the key message, isn't it? Embed your next generation, and if you do need to hire your next generation, it won't be detrimental. Actually, it can save a fire, as you've just said. And I think, as everyone can imagine, condensing 12 years of what you guys do at Agreus and what we do is going to be difficult to get into a 30-minute session. So we've had investment appetites, we've had how to retain talent, how to embed the next generation. What are the key takeaways for family offices listening? Obviously there'll be, hopefully, a few more of these along the lines in the next future, but in the near future I should say. But what are the key takeaways today for family offices listening?
I think professionalisation is one of them. I think making sure you have got a professional structure that works for your particular family office, and that can vary. That might mean making sure you've got all the right structure in place for your HR, so you've got the right contracts in place, you've got the right compensation model set up for you, you've got the right people doing the right, and you know what the family's trying to achieve. I think that's definitely one. I think another thing is obviously investments. If you are a family office that has in-house investments, I think it's really key to make sure you've got the right people. It's really difficult, and obviously there's a balance of using external investment managers and bringing it in-house, but I think you need to really understand, do I have the right people to make in private equity investments? And we've had clients that told us they've invested in hotels on a private equity, and it's taken up 80% of their actual time and resources as a team, whereas it's only 20% of their actual allocation of assets. So they didn't have the right people, they couldn't manage it, so it became a problem for the family. So I think having the right talent inside is really key. Anything more you'd add to that?
Yeah, just to support what you said, retain, because it's hard enough to hire people, right? So you've gone through all this challenge, all these costs, and all this time and energy in terms of trying to zero in on the best CIO or CEO or even an accountant or whatever, it takes a lot of effort, time, money, fees, and the time away from doing your regular business to interview candidates and everything like that. And the worst thing that you can do after that is not retaining them. And it's quite simple if you boil it. As long as you've got a decent culture in the organization and it's not a madhouse, and they tend to do what they're expected to do, and there's a performance review metric in process, and they're paid in line with the market. Retention is not necessarily so hard, But I think a lot of family offices struggle with that, and I think more than ever today, retention is absolutely key, because you want to not just hire the right kind of people, but you want to retain them for the long term, because family offices, unlike the corporate world, are exposed to reputational risks, privacy risks more than anyone else, I'd say, because a disgruntled employee could be really bad for a family office. So I'd say retention.
I agree, and that, you could probably talk a whole new podcast on this, but retention could also mean, we do compensation reviews, and often when we talk and interview all the key employees, one of the biggest things is maybe they're not providing any professional development, so that it's not just about the money's key, but it's not always money why people leave. So think about your staff. Am I providing them? It could just be getting more responsibility in the business, or it could be going on courses, attending events. Building their knowledge base, that makes a lot of people happy. So I think that's key. And the final thing I'd just say to add to what the future for family office, I think you need to be realistic, and you need to think. At the moment there are more there's more jobs around, aren't there? At the moment, so it's quite. If you are a strong candidate, then you probably have lots of opportunities for you. If you're not offering the flexible working options that a lot of the big your competitors in the professional services world offer, you may struggle to compete. And also be realistic in what you need in-house, because it's not surprising we're looking for an investment analyst who's got to come from Cambridge or Oxford, 5 years experience in a fund, but we want to pay them £50,000. It's like, that won't get what you want. So I think you need to be realistic about what you're trying to achieve. And I think the future's really positive for family offices. It's a great place to be. With that wealth transfer, there's going to be lots of action happening, I think, at the moment.
As long as regulations don't impede too much on their operations, I think they'll thrive. They'll continue to thrive, and they are an investor class that's really making change in society today. They're investing in the forefronts of things like be it technology, pharmaceuticals, healthcare, whatever it may be, making real change and impact. Even not just in the philanthropic sense, but in our day-to-day lives via technology and everything else that they invest in. So I think it's in everyone's best interest if this investor class generally thrives. So the future's bright, definitely.
Absolutely, and I think, as you've said before, Tayyab, that family offices can be described as the backbone of the global economy. And so I think in summary, as you say, hire right first time, retain them, and continue to upskill and compensate correctly, which is obviously two things that Agreus can help with. So that's all from us at Agreus on this podcast. There's going to be lots more coming up on everything from multi-family offices starting out with single family offices, leadership, but please do like, share, comment, and let us know what you'd like to hear about next.
Thank you.